Hello everybody, this is Lara at pureelliottwave.com. I'm going to give you an XRP updated analysis today, and I'm going to do this in a more formal format. This is the format that I do my Bitcoin analysis for my membership every week on Monday, but today we're doing XRP. XRP is consolidating within a range. I'll go through key support and resistance levels when we get to the end of the video, when we're looking at technical analysis charts. Elliott wave analysis first, classic analysis last. But before I do that, if you just want to read this, click through the link below in the description box on the YouTube video and you'll go through to this article on my website. I personally hate learning via video. I'd much rather look at charts and read text, and if that's you too, then stop watching now and go and read the analysis that I've written up for you on my website. Okay, at the monthly chart level for XRP, my Elliott wave analysis begins down here. This is the December 2015 low. From this low to this high, I am counting a complete 5-wave impulse. 1, 2, extended 3, triangle for 4, and a long 5th wave. These are not Elliott wave ratio. These are not Fibonacci ratios. I've just noted the lengths of the waves in relation to their prior actionary wave on the chart, so that I can get an idea and reminder of how this particular market behaves. Primary wave 3 was 85.52 times the length of primary wave 1. This is typical for cryptocurrencies. Their third waves are extremely long in comparison to their first waves. And the 5th wave here was 8.5 times the length of the 3rd wave. And again, that's very normal for these cryptocurrencies. This is on a semi-log scale, and so it doesn't look like it's 8.5 times long, but that's because of the scale. In terms of price travelled, it is 8.5 times long. Following a 5 up should be a 3 down. I'm labelling the 5 up cycle wave 1. It lasted just over 2 years. Cycle degree waves should be expected to last from 1 to several years, and so this duration fits the labelling. This looks like it's the correct degree. Following a 5 up should be a 3 down. Cycle wave 2 has lasted just over 2 years, so again fits the duration expected for a cycle degree wave, and it subdivides quite neatly as a double zigzag. Here is the first zigzag. It is labelled primary wave W. The double is joined by a brief shallow 3 in the opposite direction labelled X, and the second zigzag deepens the correction, giving the whole structure a counter trend movement. A double zigzag or multiple zigzag should have a counter trend movement, should have a clear slope. After 2 begins 3. Cycle wave 3 may be expected to last from 1 to several years, with getting close to several more likely. It should be longer in duration than cycle 1 and longer than length in cycle 1. A word about my targets. They are highly provisional, and as I have more structure, I will be changing those targets. Target calculation for cryptocurrencies is extremely difficult. You can't use normal Fibonacci ratios that you usually use in Elliott wave, like 1.618 and 2.618, because if you'd done that for primary 3 here, you would have been woefully short of a target calculation using those ratios. Likewise for intermediate 3, and that's why I'm putting these numbers on the chart to remind me of that. And so this is an extremely conservative target, probably far too low, but I'll use a Fibonacci ratio for now. If cycle 3 reaches 11.09 times the length of cycle 1, the target would be 36.73. Cycle wave 3 may only subdivide as a simple impulse, and it must meet all of those core Elliott wave rules. It must move beyond the end of cycle wave 1, and it must move far enough above that point to allow for the cycle wave 4 to unfold and remain above wave 1 price territory. So there's a long way up to go for this cycle degree wave. Within cycle 3, it will be labelled as an impulse at primary degree, and so far primary 1 and 2 may be complete. Primary 3 may also only subdivide as an impulse. Within that, intermediate 1 and 2 may be complete. The target for primary 3 is for it to reach 16.35 times the length of primary wave 1. That's an extreme Fibonacci ratio, but it's somewhat close to this 3rd wave in relation to this 1st wave length. So That's why I'm using it in this case. Within intermediate 3, no second wave correction may move beyond its start below 0.51271. At the weekly chart level, we're going to focus now on this structure here, from this low here, the end of cycle 2 and the beginning of cycle 3. On the daily chart level, I've looked at the subdivisions within primary wave 1, because at the weekly chart level you'd want to label 1, 2, 3, 4, 5, but it doesn't work. I have managed to figure out how it subdivides as a 5-wave impulse at the daily chart level and meet all Elliott wave rules, but the detail can't be put here on the weekly chart. Just as a note, I have done that exercise. Primary 1 and 2 may be complete. Primary 3 may only subdivide as an impulse within it. Intermediate waves 1 and 2 may be complete, and intermediate wave 3 may be beginning, with minor 1 and 2 may or may not be complete. It could move lower, and if it does move lower, it may not move beyond the start of minor 1 below 0.51271. Let's take a look at minor wave 1 at the daily chart level from its low down here. This point here, it subdivides really nicely as a 5-wave impulse. 1, 2, 3, 4, 5. Minor wave 2, I am going to tentatively label it over here. It would be a particularly brief zigzag. It could continue lower as a double zigzag, and so I have to leave the invalidation point down here at 0.51271 to acknowledge that risk with this wave count. If it was longer lasting, then I may move the invalidation point up, but it's entirely possible it could have been that brief, but I need to leave the invalidation point down here. At the monthly chart level, this alternate looks at the possibility that cycle 2 was not over here, that it could continue lower as a double zigzag. This has a low probability. It would see XRP seriously, massively diverge to an enormous degree between its direction and most other cryptocurrencies. That's possible. They're not always positively correlated. For example, Bitcoin's really close to its prior all-time highs and in an obvious upward trend at the moment. XRP is consolidating over the last couple of months and hasn't yet seen an upward breakout. So they can diverge, but for them to diverge to this enormous degree just stretches believability a little bit too much, but I always like to have an alternate, and so this is the best I can see at this stage. If XRP is not over for this if the bear market is not over for XRP, it could be continuing lower as a double zigzag WXY. Couple of problems with this wave count though, which reduce its probability in Elliott wave terms. Primary wave W does fit as a zigzag. A, B, C, with C an ending contracting diagonal. I have checked the wavelengths and it does meet the rules for a contracting diagonal, and particularly this upper trend line is nicely tested here, so it has a reasonable look, but this doesn't have as good a fit as seeing this movement as a double zigzag, which is what my main wave count does. So this reduces the probability of this wave count in Elliott wave terms. Primary wave X. X waves within double zigzags are most commonly relatively brief and shallow. If it's over here, it's neither brief nor shallow. It's much more time consuming than an X wave within a double zigzag normally is. Now this is absolutely valid labeling. It does not breach any Elliott wave rules. It's entirely valid, but the duration and the depth of primary X here reduces the probability because this wave count doesn't have as good a look as the main wave count. I hope that makes sense, but I always like to have an alternate. What about classic analysis now? Price is consolidating with resistance about 1.340 and support about 0.85. I've tried to narrow in those zones at the daily chart, so the figures at the daily chart level will be just a little bit different. Volume is light and declining as price is moving sideways for several weeks. On balance, volume is also within a range. This is a reasonably weak range though. Resistance is weak because there's only 2 required anchor points to draw the line, but support has got more technical significance. It's got at least 4 tests. This line is long held and it's almost horizontal, so support is significant, resistance not so much. If we get a breakout by on-balance volume prior to price, that may indicate the breakout direction for price. If we get a breakout at the same time as price, it would add confidence in the breakout for price. I need to see price break above resistance or below support on a closing basis at the daily chart level for confidence of a breakout. An upward breakout requires support from volume for confidence. A downward breakout does not. RSI is in neutral territory. There is still plenty of room for price to rise or fall. ADX is declining, indicating no clear trend, and stochastics is neutral. For this consolidation, I want to use stochastics at the daily chart level. We have a high here. Stochastics reached overbought. Stochastics is oversold here. We have a downward swing to support. Now we have an upward swing, nearly reaching resistance at 1.28. Stochastics reached overbought, and now stochastics is moving back down toward oversold. I would expect price to continue choppily to move lower towards support about 0.88, and that's another reason why I've left my invalidation point on my daily Elliott wave count, where I have to allow for the reasonable probability, not certainty, but there is some reasonable probability that a downward swing could continue here for XRP. From a classic analysis point of view, that possibility must also be understood to be reasonable. On balance volume at the daily chart level, watch this one really closely in coming days. If we see a break below support, because this trend line here is almost horizontal, somewhat long held, and has 4 prior tests, it has some reasonable technical significance, that would give a reasonable bearish signal. If that happens, expect XRP to continue on lower to support about 0.88. If we see a break above resistance for the short term, that would be a little more significant than the resistance line at the weekly chart level, and then we may expect the probability of an upward breakout being imminent has increased. I would want to see price close above 1.28 at the daily chart level on an upward session with support from volume, and then for further confidence in an ongoing upward trend, a close above resistance at 1.40 on an upward session with support from volume. ADX at the daily chart level is also indicating no clear trend. RSI is neutral, we've been over stochastics, and ATR is declining as price moves sideways within this consolidation. That is absolutely normal behaviour for ATR during a consolidation. The moving average situation is overall bullish. We had a death cross down here toward the end of this bearish move, and then we had a golden cross here. So overall, the probability of good things happening is more likely than bad things happening. And so it looks like an upward breakout may be more likely than a downward breakout, but we don't have that yet. This is the time to be patient with a market, and sometimes it's the times when you step aside and exert patience that make the difference between success and failure. Knowing when to step aside and knowing when to jump in is quite the skill. I favour the probability of an upward breakout. That's all from me today with your XRP analysis. I hope that all of you are having a fabulous day.